Hello, my name is Oge, and today we're going to start all over again as a beginner class for the Forex market. So the question that everyone always asks is, what is Forex? So Forex comprises of the foreign exchange market, which are dealt with by various institutes like the central bank, institutional investors, companies, individual, commercial bank, broker. Now, Forex is a short term for forex exchange. It is the trade of over 5 trillion in transaction daily. It's the world's largest financial market which can be capitalized using your smartphone, your tablet or personal laptop as long as those devices can connect to the internet and you can use them to actually like sort things in the internet. You can actually just run the forex exchange. Now, what can be traded? We have currency, that's number one, which involves our euro, pounds, the USD, Canadian dollars, all kinds of currencies. Then we have what we call commodities like silver, gold, oil. Then we have the cryptocurrency, the Bitcoin, the Litecoin, the Dogecoin. Then we have the synthetics, that's the VIX 75, VIX 100, boom and crash. That one is actually very dangerous. And we have the stock market also. The stock market like Netflix, Silverbird, Tesla. They're all under the stock market. But for now, we're going to focus only on Forex market. That's what actually focus our attention on the Forex market. Now, sections for trading in the forex market. Now we have the Tokyo section, we have the London section, we have the New York section. So we also have what we call the Sydney section, but I only picked these three more to emphasize more on it. Now, from 12 a.m. Nigerian time daily to 9 a.m. Nigerian time is where we have the Tokyo section. Those that trade all these Japanese yuan, they will actually fall in this category of Tokyo section. We have the London section, 8 a.m. to 5 p.m. Nigerian time. We also have the New York session, which is from 1 p.m. daily to 5 p.m. Nigerian time daily. But now there's what they call overlap. It's what we call overlap. Now, markets always overlap during this period. I think it's from 1 p.m. to 3 p.m. or from no, from 12 p.m. to 2 p.m. in the afternoon. I'll indicate it on the. I will edit this and indicate it on the video. Under the content section, the timing of the overlapping time. That's between the London section and the New York session. Now we have currencies that currency pair we trade. Like I said before, we have the USD, which is called dollar. We have the AUD, which is called Australian dollar. We have the JPY pair, which is called the Japanese yuan. We have the CAD, that was a type error. CAD, which is called the Canadian dollar. We have the GBP, which is pounds. The CHF, which is called Swiss franc, and the EUR, which is called euro. Now, when you're actually in the market, the whole names won't come out like this, right? It will come out in the short form, the one in the front. You will see it in the short form. Now, when you see those words in the short form, the one in the front, you will know that, okay, this is the pair that you're actually going to be trading. Do you understand? So we have what we call, what is a broker? Now, a broker is like the bank. I usually categorize it like a bank, but not really a physical bank. Like I would say, it's the middleman between we traders and the inter market. Now, when you place an order with your broker, that's the middleman, the mini bank. I call it a bank actually. I use a bank to explain it so people can actually understand. The broker places you on a trade, and there's what they call commission, which the broker gets when he places you on a trade. So even though you're on a losing trade or you're on a winning trade, a broker will always make his or her commission from your trade, from the orders that you have placed. So that's the summary of a broker, that the middleman between you and the foreign exchange market. Now, what is leverage? Now, leverage is the borrowed money which is called capital to invest in a currency, stock, or security. But actually, the broker is actually borrowing us this money. When you're trying to open an account with a broker, you're going to see a part they say leverage. You'll see 1:100, 1:200, 1:500, 1:1000. Now, you cannot compare yourself with someone who is using a leverage of 1:1000 when he places a trade to you that's going to use a leverage of 1 to ratio 100, there's going to be an entirely big difference in the amount of money he or she's going to lose to the amount of money he or she's going to gain, different from the person who's using 1 ratio 100 to 1 ratio 1000. So leverage also plays a very big impact in the amount you're going to risk in the market and the amount you're going to. Now, what is a pip? A pip is the movement in the market. It is moved in percentage of points. It is moved in percentage of points based on where the broker placed you to the target. Like I use an example. Let's assume you are placed in A and your market moved to B, right? So you have from A to B is 50 points. So 50 points is your pips. In the Forex, actually, in the Forex that we actually trade, the Forex market, trades are being measured in pips. We make money through pips. If you go 100 pips, you've made, it depends on the lot size also. It determines how much you're going to make when you actually categorize that with your leverage, your pips. These are very, very important. While I'm saying this, which is your lot size, micro lot size, that's 0.01 lot size equal to 10 cents. That's really one pip will give you 10 cents. A mini lot size 0.1 lot equals to $1. One pip will give you $1. A standard lot size, one pip is roughly one lot size will give you $10. So one pip will give you $10. So imagine you're using 10 pips multiplied by 10 cents multiplied by $1, that's $10, multiplied by, sorry, $10, that is $100. So I hope this is explanatory for you all to understand.